What's up guys, Nick here, back with another video. After a decade of stock price stagnation, Microsoft stock has been blowing up, and I'm curious if this rally is likely to continue or is this a bubble that's going to burst. At the end of this video, I'm also going to answer if I think you should buy, sell, or hold Microsoft stock. So here are the past 25 years of stock price movement for Microsoft. You can see the 2000s tech bubble and its bursting, followed up by nearly 12 years of completely flat price movement. If we compare revenue and net income over the time period, we can see that net income pretty much followed the same path as the stock price. Solid growth early on between 1998 and 2000, and then relatively flat net income between 2001 and 2018. You see a massive jump from 2019 to today, and when we look at the share price rally, we can see that it starts just before the net income and revenue jump. So what caused this significant change? Well, Microsoft breaks itself down into three segments: productivity and business products. These are things like Office 365 subscriptions, Teams, Skype, Outlook, and LinkedIn. Then there's the intelligent cloud, which is basically their server products and cloud services like Azure, SQL Server, Windows Server, and GitHub. Then there's more personal computing. This is licensing for Windows, devices including Surface and PC accessories, and their Xbox hardware and software. So if we look at the chart comparing revenue and net income for each segment, Intelligent Cloud is quickly becoming the biggest producer of revenue and net income for Microsoft. I did find it pretty interesting that more personal computing net income is actually the biggest grower, even though the revenue for this segment is a U-shape. While more personal computing revenue only grew at 2%, net income actually increased by 25%. According to the 2020 annual report, Microsoft said the change has been more sales shifting to higher gross margin businesses within the Windows and gaming segment. When I first read this in the report, I thought this was probably caused by an increase in the amount of time being spent at home for most people. However, when I looked at 2019, I actually found that they reported the same thing. I see this as a very positive development because this is a trend Microsoft saw before the pandemic began, and I think that it should be likely that this continues when things return to somewhat normal. I also expect as the Xbox Series X comes out, the more personal computing segment will see a boost. They reported from 2019 to 2020, there was a 31% drop in Xbox hardware revenue due to a decrease in volume and the price of consoles sold. Because hardware is a low margin business, we may see some reduction in this segment's operating margin. The most impressive segment is the intelligent cloud business that saw 24% revenue growth and 32% operating income growth. They said Azure revenue grew 56% between 2019 and 2020. And although this is down from 2018 and 2019, when Azure revenue rose 72%, it's still an incredibly impressive number. Businesses are moving towards cloud servers to handle their data needs. The big advantage of using Azure cloud services, like any cloud service, is you don't have to maintain servers, and it's easy to transfer information between devices. Cloud computing has seen huge amounts of growth and competition, and Amazon has been the market share leader with 33% of the market. But Microsoft Azure has been catching up in second place with 18% of the current market. What will be interesting to see is if Microsoft, who has been creating business products for decades, will be able to leverage their knowledge to create better services and relationships with businesses using their products. The advantage Amazon AWS has is they were the first in the market and they were able to capture a huge market share. It's also not very easy when you have large businesses with petabytes of data to all of a sudden switch cloud service providers. I think an underrated portion of their business is the productivity in business products. $3 billion of the $5 billion revenue increase they saw from 2019 and 2020 is from Office 365. They said that Office 365 commercial revenue grew 24%, and they saw a rise of 23% of their Office 365 subscribers to 42.7 million, with increasing demand from remote work and learning scenarios. When I first looked at the numbers in the annual report, I was pretty surprised, and to be perfectly honest, I really haven't paid much attention to Microsoft over the past 5 years or so. My image of Microsoft has been stuck in the really poorly executed major product releases they've had over the past decade that have completely failed to catch on. And I remember when Microsoft pushed us away from Windows XP, which I had really liked, to the really disappointing Windows Vista. And then later on they came out with Windows 8, and that was so bad that they skipped Windows 9 and just went straight to Windows 10. I think about the Zune and the very confusing experience that I'm still having with my Microsoft and Xbox Live account. What I didn't realize is in 2014, Microsoft actually had a leadership change. The longtime CEO Steve Ballmer stepped down and Satya Nadella took over. I noticed many of the main criticisms that have been hurting Microsoft's reputation have improved since Nadolja took over. They've gotten away from Internet Explorer to the surprisingly decent Edge if you've ever given it a shot. They aren't releasing operating systems that are set up for touchscreens when they haven't created a demand for laptop and desktop touchscreens. It seems like Microsoft has quietly gotten things going in the right direction. Although I will point out the Xbox Series X does look pretty strange and definitely not as cool looking as the PlayStation 5. So let's take a look at the valuation for Microsoft and see if the current price makes sense. So a quick look at the balance sheet shows $301 billion in assets to $177 billion in liabilities, which gives us $123 billion in equity. They have $57 billion in debt, so that gives us a debt-to-equity ratio of 46%. This is an awesome number, and it tells us that they have a very good, healthy balance sheet. Looking at the income statement again to determine the right growth rate for Microsoft, we should pay attention to the past couple of years since they've had a CEO and philosophy change. I think from 2015 forward is the right time to look at them. Revenue grew at 8% per year from 2015 to 2018. But net income grew at 29% and their earnings per share grew at 31%. I'm going to use a conservative growth rate of 14% for Microsoft, but I realize this is pretty low. If you want to try this out with different numbers, check the link in the description for my PE ratio calculator. It's in a Google Sheet and it uses the same formula that I use to correlate growth rate to the fair PE value. So a growth rate of 14% comes out to a fair PE value of 35. Microsoft's trailing 12 months earnings per share is $6.20. So this gives Microsoft a trailing valuation of $217, which is exactly in line with today's price. Right now, they're projected to finish the 2021 fiscal year with an earnings per share of $6.77, which gives us a valuation of $237 or 10% upside. Next year, which is actually 2022 because we're currently in the 2021 fiscal year for Microsoft, they're forecasted to earn $7.47. This gives us a forward valuation of $261 or 21% upside. Now keep in mind Microsoft also pays a dividend, so with these share price gains, you'll also see a payment of $2 per share in dividends. Now there has been some speculation that this might increase, and based on their payout ratio history, I do expect this to go up to about $2.10 or $2.20. Before I get into my buy, sell, or hold rating for Microsoft, really quick, if you could help me out and hit the like button below. These videos do take a lot of time to research and edit, and I put a lot of thought into making these videos as useful as possible. If you could pay me back with a quick thumbs up, I would be extremely appreciative. So, for my buy, sell, or hold rating for Microsoft, I rate this as a strong buy. And any dip in the share price from here is an even stronger buy. I think you have very good share price upside, impressive growth, a healthy balance sheet, and an improving business model with a CEO who's quietly refocusing Microsoft towards better growth in the future. It's everything that you want to look for when you're looking for a good long buy. Now, a quick disclaimer that I do not currently own any Microsoft stock, but I am now seriously reconsidering that and most likely will be buying some in the near future. If you want to see my past valuations with the most up-to-date information, check the link in the description for the Google Sheet link that I keep up to date with the stocks I've valued on this channel. If you like this kind of content, feel free to subscribe and hit the bell notification so you know when I upload a new video. And as always, thanks for watching.